All right, three things in 3 minutes. Let's get it. So, got a quick story. A self-employed borrower was pre-approved at a big box bank for about $1 million. They kept losing out on homes above that. Their agent suggested they get a second opinion from us, but the buyer was hesitant. They didn't want to start over. They assumed that all lenders were the same. Eventually, they lost enough that they finally reached out. Here's what we found. The big box bank had qualified them strictly off their tax returns. And a lot of self-employed people, they write off aggressively, so their income looked lower than what it really was. Instead, we analyzed 12 months of business bank deposits using a bank statement loan. This pushed their max pre-approval amount from $1 million to about 1.8. They didn't even need all of it. They closed on a home a few weeks ago at 1.3. They got the home they wanted, and their agent made a $32,000 commission. And here's what surprises most people. The rate on that loan was not dramatically higher. In fact, it was only about 0.25% higher than the rate they were getting quoted from that big box bank. 7 years ago, these type of bank statement loans were rare. Today, we use them all the time. So here's the lesson. If you work with self-employed borrowers, which I'm sure you do not rely on a big bank or credit union for pre-approval. They have limited tools. This option isn't necessarily for everyone, but if you don't explore it early, you might be capping your buyer before they even write an offer. All right, number 2, let's talk about the war in Iran and what it's doing to mortgage rates, because this is hitting us pretty hard. Whether you think these strikes were necessary or reckless doesn't matter for the markets. What matters is this: oil. After the US-Israeli strikes, oil prices surged, and here's how this chain reaction plays out. Iran conflict, oil spike, inflation fears, higher interest rates. The 5 to 10% move up in oil can add another quarter to mortgage rates. Inflation was already running above the Fed's 2% target for the last several years, and now 30-year rates have jumped up drastically. Things are shaky. And here's the bigger issue. Expected Fed rate cuts for July and September, those are pretty much off the table right now. Those cuts have evaporated. If this conflict is short, the impact might fade. If it drags on, rates could stay elevated for much longer. This is just an insane timeline we're living through right now. Finally, as it relates to rates, 30-year fixed mortgages had dropped below 6% for the first time in 3.5 years just last week. Well, they're now actually closer to 6.25. They jumped up 0.25% just in the last 2 days. This is about the global shock. Investors are rushing not into the safety of US treasuries, but are fleeing pretty much everything. This time the market is reacting differently than it usually does. The strikes on Iran immediately pushed oil prices higher, which raised energy cost fears and inflation expectations. The last time we had a conflict with this much global impact was when Russia invaded Ukraine. And that's what kicked off this whole inflation worry to begin with. It's possible things could get even worse if this drags on. Be safe out there. Y'all got this.